Yeah. First, I want to thank Manny for organizing, and Aaron, where he is here, and especially also Mats Erik, who is a big fan of the community here and who brought me basically to the contacts and who organized it that I could be here today. So thanks a lot. I want to talk about Bitsquare, the decentralized exchange. I'm the founder and main developer of the project. At the beginning, I would like to give a little bit of an overview about the motivation, why I built this project and why I think it's important. Then I will go into the details, how it works, how you can build a decentralized exchange. And in the third part, I will talk about the concept, which is probably quite famous already with the DAO. So this concept of decentralized autonomous organizations, what I will like to apply on Bitsquare. So Bitsquare will become a DAO. But it's quite different to the DAO, what you know from this Lockit DAO. So maybe you have to clean your mind a little bit what you know about DAO, and then I will explain how I want to implement the DAO. I would like to start with that quote from Satoshi Nakamoto, the real Satoshi, not this Australian cowboy. What is needed is an electronic payment system based on cryptographic proof instead of trust, allowing any two willing parties to transact directly with each other. And I think this transact directly, that's really the core of Bitcoin. So he has invented a money system where you can globally send money from one person to the other without any person in between, without any trusted third party. And I think that's such a huge achievement, like the internet itself, in my opinion. And I think it's a model what we should try to replicate for all kind of other applications as well. But unfortunately, what we see usually in the ecosystem around Bitcoin is that model. Also this classical model with trusted third parties in between. When two people are interacting, you have the middleman who is organizing, who is controlling, who is dealing with the transaction between those people. And that's not very surprising because that's a very traditional and historically long time used model. When two people who don't have a trust relationship with each other, then they are looking for a third person who both are trusting and then use that third person for dealing with the complicated stuff and where they don't want to do directly because otherwise they get cheated. So it's not surprising that many people are applying still this model. But as Bitcoin has proven, we could do better today. And I think especially with Bitcoin, it's even more problematic to apply this model because in the context of the exchanges have become, the centralized exchanges have become basically gatekeepers to the system of Bitcoin. So when you want to buy your first Bitcoin, there is not many options to not go over a centralized exchange where you need to register with your name and your real life identity. And then also at the beginning at least, they are keeping your money. And there are not many alternatives to not do that. I mean, a little bit with ATMs or whatever, or if you know somebody, you can buy it themselves, but it's very small amount of alternatives out. And I think in the context of Bitcoin, those gatekeepers are very critical because of the privacy issues. The exchanges, when they get your identity, they can connect your real life identity with the Bitcoin address. And as we know, Bitcoin address is pseudonymous. So as long as you don't connect it with your identity, you are anonymous. But as soon as you get it connected, it's connected with all the follow-up transactions because otherwise it could not work when the computers could not evaluate the flow of transactions. And companies who are doing chain analysis, they are pretty good with getting a lot out of this information, much more. We get confused easily, at least when you're not a mathematician or a graph analyst, then you get lost very easily when you have a few transactions and it breaches and comes back together. But algorithms and computer programs are very good with that. And we are actually destroying the privacy of Bitcoin when we are going further that road. And I think it's not only privacy, it's also about fungibility. Fungibility is the property of money, a very basic property of money, that every unit of money is exchangeable with another unit. So when you're receiving a dollar note which has traces of cocaine on it, you don't care about it because you know you can exchange it. You have no obligation that you have to check out, okay, this guy in the past has it used for an illegal activity, because it's not, yeah, otherwise you would not accept the money. The money would render itself useless. And usefulness for society of money is more important, like that you can track down some criminals or so. And in the context of Bitcoin, it's much more complex because it's a globally, it's designed as a global currency. So something which is unlawful in some country, or even in one state in America where marijuana is not legal, is legal in it's legal in the other state. So you could not apply laws to something like money, in my opinion. And I think some such basic infrastructure or tools like money or electricity have to be neutral. Otherwise, you are putting so much friction and costs in the system that they become actually useless. And as we have it, the main reason why our fiat system is so inefficient is because all of those stuff what they want to put, what they want to apply on the system, which should not be a part of the core system. You can build system on top of that, but the basic infrastructure should be neutral, like the internet itself. Otherwise, you render the whole system useless. Can we keep the questions after the end? Because otherwise I lose the flow and get lost in details. And of course, another very important issue is security. As hopefully not many of you remember Mt. Gox, and hopefully not many of you get burned by that. That's a very big issue in the crypto space. Every few months or every month probably, some companies or some exchanges got bankrupt or get hacked. And I think it's not by chance, because I mean there's a big bounty for the criminals to hack an exchange or to hack a company where they know they make money with Bitcoin or they hold the money. And I think it's an illusion that you can think you can do better like those, because even the biggest companies, like Andreas Antonopoulos said in a talk in Barcelona, even the biggest company in the world, the most wealthiest like Sony, they got hacked. And even the Pentagon got hacked and got leaked. So it's an illusion when you think for your Bitcoin company, you can do better and you can keep the data and the funds of your users really secure. You can limit it maybe in a way, but at the end I think we need other solutions. And how can this be solved? Of course, that's not easy. But I think when we are avoiding to hold data and to hold users' funds on a centralized point, when we're really decentralizing everything, we can get there. And that's, of course, easier said as done. But luckily, we have a few working examples that it can be done, and that it can work. And most famously, BitTorrent and Bitcoin itself, they have shown that those systems can be very robust, very censorship resistant. And basically, I mean, like in Bitcoin, there is a $8 billion bounty out. So when any hacker would manage it to hack such a decentralized system to steal the money, they would have done it already. So we have a very, very high probability that those systems are much more secure, like centralized systems where you have servers, where you have people in charge, and a lot of weak elements which you can attack and which you can compromise. And I think it's not only about this other issue what I talked before, because we have already this sharing economy like Airbnb and Uber, but what they're actually really doing, they're just connecting the peers and extracting their profit out of this interconnection of this economical interaction between people. And now I think we can do better. We have a shift from this pseudo sharing economy to a real peer-to-peer economy where the peers are really connected directly with each other and exchange their value directly. And there's nobody else who is directing the value and make the value lower for the peers. And I think that's for the whole society a very important move where we can enable again interaction which is much more efficient and much more frictionless like it is at the moment. And it's actually nothing very new. I mean, in the past we have usually that model on the right and not that on the left. And I think it was much more resilient and much more efficient like we have it today in many areas. So how does Bitsquare fit into that picture? Bitsquare is a desktop application. You simply download it, install it. It's a one-click install, available for all major operating systems. So it's really super easy to use. It uses a custom peer-to-peer network over Tor. When you're not familiar with Tor, Tor is basically a security and privacy layer. It's not this dark web, what the media love to talk about, that does not exist. There's not a there's not a bright net and a dark net or whatever. It's all the internet. It's just that they're applying cryptography and applying different concepts to get a higher level of security and of privacy, like other tools like TLS system, what everybody is using when they're connecting to their bank, this HTTPS. That's another security layer or a security system, and Tor hidden services, what we are using, is a better solution, basically. There's nothing to do with the criminals and with the dark web. And the peer-to-peer network is similar to the Bitcoin network. It's called a flood-fill network. So that's very robust infrastructure. You are connected with a group of other peers, and you are sending them their data, and they're sending the data to the other connections. So there is no single point of failure. There are no servers. And in Bitsquare, there are basically only two types of data. Either they're completely private between the traders, so everything's encrypted and routed over Tor, or they're completely public to everybody, like the Bitcoin blockchain or the offers in Bitsquare. When you're publishing an offer that I want to buy 1 Bitcoin for that price, then of course you have to make it public for everybody because everybody is interested in that. But there is no special access for Bitsquare, where Bitsquare has a privileged access to data and can get out more data like anybody else. So either it's public and everybody can deal with the data like the blockchain itself, or it's private and then it's only readable and it's only designed for the two people who are interacting. And most importantly, Bitsquare is never holding funds or users' data. So the trade is designed in a way that the money is always either in your local wallet or it's locked up in a multisig. We'll explain this in a minute. In a multisig, which is basically a construction or a smart contract on the blockchain. So Bitsquare is never holding the money. Actually, we don't know when people are trading because it's a private interaction between them. And we are never holding the data of the money, the data of the users. So the data is also stored locally, and you exchange only the necessary data with the other users to enable the trade. So when you're buying Bitcoin with shekel, you need to send them your bank account that you can make the transfer. And yeah, there is no registration required. And that might surprise a few people because you have all the regulatory requirements with AML and KYC, also know your customer and anti-money laundering rules. And I was in contact and I was talking with experts, and I was discussing with them what are the reasons why these regulations are in place. And the reasons are because there was happening fraud, of course, in the past when the stock market, when it was emerging in the beginning of the last century, it was probably similar like in the crypto space. A lot of bubbles and a lot of damage has been created because people lost their money because they thought that's the next big thing, and it was not. It was just for them, for the company owner who sold this as the next big thing. And then the society decided, we want to have this new thing which creates new abilities for the society to make trade and economy more frictionless, but we don't want to have the negative side effects like all these scams and these Ponzi schemes and whatever. And for that they created regulation to make it harder for the scammers to succeed. And so the basic rules are when you are holding funds of users, you are basically treated like a bank because you're doing the same like a bank. You're managing money for somebody else. So when that's a lot of money, it's a lot of responsibility, and then the law system put a lot of pressure on you that, that it's not easy to just open a new company when you collect 150 millions and whatever happens then with that. And when this money is lost, even if you go to jail, the 150 millions may be gone. And Bitsquare is never holding the money, so we are out of that regulatory regime because we avoid the problems why these laws are created for. Another not so well-known aspect is automatic order matching. When you have a centralized exchange and they are doing usually automatic order matching, so when there is a buyer and a seller, they match them together. You have to trust them that they are matching your trades in a fair way, that they are not taking the best offers for themselves and do front running and all kind of manipulation. And so that's also a point where you need to trust a company, and for that, that's the reason why they are regulated as well. So for me, it's not a surprise that the Bitcoin exchanges got in trouble with regulatory regimes, and I think it's just a question of time until it will become worse and worse, and at the end they will end up like banks. They have very high costs, like in America it is. I mean, you have to, in every state you have to apply to the regulatory regime, and it costs you not billions but millions for sure for lawyers and applying, and takes a lot of time. And we add a lot of friction to Bitcoin, what we don't want, of course. I mean, we want to have this cheap and fluent and fast system, and we don't want to create additional friction. Yeah, back to the slide. The next point is open source. So the Bitsquare is all completely open source and transparent. We are using GPL license. And a very important part for me is also that Bitsquare is, we're trying to apply the decentralization aspect not only to the code and to the way how the exchange works, but also to the infrastructure of the organization of the, it's not a company, it's not a startup, we don't have investors, it's a decentralized autonomous organization, or it's designed like that. And I think that's a very important part to avoid single point of failures, because I think with that setup that you can trade in a really private way, it has some, at some point when it becomes really successful and relevant, some governments will not like it, because they like to control everything and make total surveillance. And then they will find the weak points in the system, and when I would have a company and registered in a country with that, that would be the first where they put the pressure on. So I want to avoid this and do it basically like Bitcoin itself. I think that's the best role model, what we have, the best blueprint in Bitcoin. There is nobody what they can put in jail or whatever to bring down the system again. It's really censorship resistant, it's really distributed in every aspect, and that's my target as well with Bitsquare. So how can this work, and how can you apply security to such a system when you don't have the third party who is securing, under quotes, your funds, or who is trying to make it secure the trade? When you make an exchange with a random stranger on the internet, he will try to scam you when you're anonymous and when you don't have a proper security system. There are basically three aspects. One is this 2 of 3 multisig. Does everybody know what multisignature is? Or is anybody who don't know it? Yeah. Maybe I give a short high-level explanation. Multisignature is a very powerful and great tool on the Bitcoin blockchain or in the Bitcoin system. It's basically something like a lockbox. So when you imagine you have a box with 3 keys, and the mechanism is that you need minimum 2 keys to unlock it. So everybody can put in money. You don't need a key for putting in money. Like it's an address, a Bitcoin address, everybody can send their money in. But when you want to spend the money, you need at least 2 keys to open up the lockbox and get out the money. And in Bitcoin, a normal transaction is also, it's a small script where you only need 1 key to unlock, your private key, to unlock the money and to spend your money. And here in this system with the multisig, you can define, you can set it up how many keys exist in total and how many keys you need to unlock it. And in our case, we have 2 of 3. The three key holders are the two traders and an arbitrator. What's the arbitrator? I will explain a little bit later. And when everything goes normal in a trade, when two people are doing a trade, then the two traders have their keys, and that's sufficient to unlock the money at the end. It will become a little bit clearer in the next slide when we go to the trade process, and then I think it's easier to understand all. I just want to give an overview about the building blocks. And then we have a security deposit. So both traders need to lock up in this multisig a very small amount of money. And that's needed as an incentive to follow the protocol because such a system cannot be automated completely. You need the human interaction to solve the problems which are unfortunately not solvable at the moment because the banks are still living in the 70s and not offering modern IT APIs where you could do an automatic trade over fiat. That's very rare. Usually you don't get this from a bank. There are a few payment processors who are offering this, but normal banks don't offer you anything of that, or that you get a cryptographic proof when you have done a transaction. It would be super easy. They only need to send you a digital signature of your transaction. And any modern IT company, if it's just a company with two people, they can build something like this, but the banks with their billions, they cannot do it because for whatever reason. And to get over these problems, we need the human interaction. So the humans need to do the work what the banks are not doing for us, and that we can ensure that the humans are doing their work correctly, that they're following this protocol. We need this security deposit. When they are not following, they will lose then the security deposit, so it's a kind of like negative incentive. So when they're following, they get it back, so they don't have a loss. When they're not following, they will lose some money. And yeah, this arbitration. At the moment, this decentralized arbitration system is still not implemented, but that's on the roadmap for the next months. At the moment, I'm the only arbitrator, because when there are problems between traders, at the moment it's only software bugs or usability problems. There are no scams or whatever. And for me, it's the easiest and most practical way that I get directly the information and help the people, because I know the system best and I can fix the issues on the code side. But of course, we want to make it completely decentralized and open. So that's probably in the next months will be developed this decentralized arbitration system. And it's basically that everybody can become an arbitrator. The arbitrator is like a mediator or a judge who is when two traders have a problem that one have not received the fiat money or the Bitcoin or whatever, then they can call the arbitrator, and the arbitrator will investigate the case and has to find out what was going wrong and then make the payout to the person who has acted correctly, who deserves the money. And he is the third key holder, so with the winning party of the dispute, he can sign the pair transaction, and then the other, when somebody has tried to scam the other traders, he will lose the security deposit. When there are software bugs, of course, the security deposit goes back to both. The arbitrator or me work for free. And the way how to design a decentralized arbitration system is, of course, difficult as well, because a random stranger on the internet can also try to scam then one of the traders. He can collude with one of the traders and then try to steal the money. So we need to make this secure also. And for that we are using also a security deposit, but that has nothing to do with that security deposit in the trade. So when an arbitrator wants to become an arbitrator in Bitsquare, he needs to lock up quite a lot of money, will be something like 5 or 10 Bitcoin. And when he's doing a collusion with another trader or not working correctly, then he run the risk to lose his security deposit. And there will be a group of arbitrators with the highest reputation, those who has worked the longest time or who connected to the Bitsquare team, who have locked up most money. And when two traders have a dispute and then the arbitrator decides for one and the other thinks, no, that was not correct decision and I've lost my money, but I was doing all correct, then he can call the second round arbitration, this arbitrators with the highest reputation, and they will investigate the case again. And when they find out that this arbitrator has not worked correctly or colluded, they will confiscate his money, because the key holder of this multisig for his security deposit will be these arbitrators with the highest reputation. So they have the power to take away the money from the arbitrator. And so the arbitrator has a lot of pressure to work correctly and to not collude, of course. And yeah, and they will get paid by the DAO, which will be explained later.
The security goes to the DAO if someone hacks indirectly?
Yeah, so as far as I understand that...
When you confiscate the money, the deposit, the money goes to the DAO? Or?
That's also all the details are not fleshed out in the money, but probably the money goes to the DAO, yeah. And the security, when an arbitrator stops working, that he says, okay, I have enough after half a year, then he gets back his security deposit, just locked up as to avoid scams. And of course, the system is not perfectly decentralized because this high reputation arbitrator could theoretically also be scammers or so, but it's very unlikely. I mean, it's aligned, the money is limited, you cannot, the trade amount is limited, so you cannot steal 10,000 of euros or whatever, or Bitcoin. And the incentives for this high reputation arbitrators they have proven already in the past that they are very close connected to the project, either because they worked a lot for the project or are team members. So it would be very stupid when I, for instance, would collude and destroy my project with bad reputation then, and yeah, to earn 1 Bitcoin or whatever. It's, yeah, I think the incentives align that it's good enough. And it's a little bit like a Supreme Court in the legal system. We stop at some point. We could go over endlessly, but of course it's not practical. You cannot implement such a system. And at some point it's safe enough for practical reasons. And even the Supreme Court can be corrupt, and probably they are when it comes about tough political decisions like with Snowden or Assange. They don't act correctly at the end because a lot of political pressure. So, but for normal cases, when it's not so much on the plate, then we can it works, the system. And here, the money is it's limited by the trade amount. So it's I think it's secure enough for this use case.
And what is the incentive? Why would
What is
the incentive? Why would somebody want to be an arbitrator?
Yeah.
And the second question?
Could we leave the questions until the end, because I get too much lost in details then. I just answer the first question and then the second will be maybe for later. The incentive will be they get paid by the DAO. The DAO will be explained later, so they get a payment. They are basically working for the system. As I said before, here we are going now through the trade process, so it becomes more clear how this works. So we only can give a very high-level overview. When you want to read more about the details, how it works all in the details, you check out the white paper on our webpage. There is everything explained. So first, we have two traders, Alice on the left side and Bob, the cryptographer's best friends. And Alice, she wants to buy Bitcoin and Bob wants to sell Bitcoin. Let's assume that Alice wants to create an offer she wants to buy 1 Bitcoin for $500, and she needs to have this security deposit. That's 0.01 Bitcoin at the moment. That's quite a small amount. In the future it will be probably higher. And she creates this offer and publishes this offer to this peer-to-peer network. So every other node in the network, every Bitcoin application receives this offer, and all offers get displayed in a table in the offer book, and they can, every user can browse these offers and filter this offer by currency, by payment method. And Bob on the other side, he received this offer, and when he thinks that's a good price, he can take this offer with a button click, and then basically the trade starts. At that point, when Bob is taking the offer, he needs to put in the amount, the trade amount, 1 Bitcoin in that case, and also his security deposit. So 1.01 Bitcoin on Bob's side, and on Alice's side 0.1 Bitcoin are the inputs for this multisig. So both traders at this, creating one transaction, one atomic transaction. That's very important, because otherwise you would have the problem who pays first runs the risk that the other does not continue. And in Bitcoin we have this great feature that a transaction can accept several inputs, several outputs. The only rule is that the inputs must be sufficient for the outputs. You cannot spend more like you put in. and you can partially sign just your inputs and send this transaction to the other user, and the other user is then signing his input, and then only then the transaction becomes valid. So a transaction where only Alice would sign and Bob never sign would be useless and cannot do any harm, would not touch the money of Bob at the end. So we have this situation that we have this multisig transaction where the money, the security deposit of both get in and the trade amount of Bob. And then it's locked up by these 3 keys. And to unlock it, we need at least 2 keys. So first, before this step, the money is always locally on the user's computer. So Bitsquare, of course, is never in touch with this money. It's on your local computer, in your wallet in Bitsquare. And at this moment, when the trade starts, it's locked up in this smart contract, in this multisig. So both cannot individually access the money anymore, but when they cooperate at the end, when everything went fine, then both will sign it and they get out the money again. Yeah, after the Bitcoin transaction has been published to the network, Alice needs to wait at least 1 blockchain confirmation to avoid a double spend, because yeah, probably you know, in Bitcoin, when you have an unconfirmed transaction which is not already written into the blockchain, there is a certain risk that the other user can spend the money additionally. To avoid this, she has to wait at least for 1 confirmation. When she wants more security, she can wait for 6 confirmations or whatever. And then she has to make the fiat transfer, also the national currency transfer, to the other user. And she gets over the Bitsquare software, she gets all the data from Bob when they're doing the transfer over a bank account. She gets the account number and the name and all what's needed that she can do a normal bank transfer to Bob. And that's out of system. So she goes to her banking webpage, she knows the data and the amount, what she has to send. She makes the transfer and then she goes back to the application and just click a button, I confirm that I've sent the money. And this confirmation will be sent over the application to Bob, to the other side. So Bob sees, okay, Alice has started the fiat transfer, and now he has to check on his bank account when he has received the money. That depends on the payment method. When you have the same bank, or in some countries, banks are a little bit more modern and can do it in the same day or instantly. The payment processes, what we're using, like OKB and Perfect Money, they are doing it instantly. And when you have bad luck and one of the traders had a bank who needs still 3 days or whatever, yeah, it can take quite a little bit of time. Unfortunately, that's the worst part in the whole system. We cannot avoid the bank. Yeah, we have payment methods which avoid the banks, like payment processors, or you can trade altcoins as well, and then you're much faster. But when you use, like in Europe, SEPA, in some countries they need 3 days, and unfortunately that's a little bit slow. And yeah, when after this time Bob has received the money, he goes also to his to the Bitsquare application and confirms it. So he checks on his bank account, and when he has received it, he confirms it, and then both traders, or the application will create for both traders, just with this button click, the payout transaction gets created, and with that both traders are signing this transaction that they are fine, that this money which was locked up in the multisig will go now to the bigger part to Alice, because she has both 1 Bitcoin, so she will receive 1.01 Bitcoin, which is the sum of this Bitcoin plus the security deposit, and Bob receives back the security deposit. And I think now it's a little bit easier to understand why the security deposit is needed, because in the first place, when we go back, when we see here, without the security deposit, Alice could simply stop at the last point and never send the money. Bob has locked up his money, his 1 Bitcoin in this multisig, and Alice would have nothing to lose. So she could just forget about it and go on holiday, and Bob need to wait and call the arbitrator and so on. So that would not work very well, because people are lazy and not responsible. Or we have to count with those people at least. And with the security deposit, when Alice is not following, she will lose this money. At the moment it's quite low, but later it will be probably 0.1 Bitcoin, which is already quite a lot of money. And on Bob's side, he could, after he received the fiat money, basically he's happy. He has sent he has sold 1 Bitcoin and has received $500. So for him, it could be already over without the security deposit. So he could be lazy and never click the button that he confirms that he has received the money. And Alice would wait a long time and then need the arbitrator to get out the money from the multisig. And again, to avoid this, that the traders are playing their role fair, like it is designed in the protocol, we use the security deposit because otherwise Bob would have a loss. And of course, that's not only theory and concept, it's implemented in real software. It's already more than 1.5 months it's out. It's a public beta version. People are really using it already. There are more than, I think 400 trades have been done the last 5 weeks, and something like 1,000 offers have been created. There are more or less 50 to 100 users online at the same time, and it was tested long time on the mainnet. 3 months we had testing time before we went live. And I think it's the easiest way to just download it, try it out. You don't need to put money in at the beginning. You can just play around, you get a feeling for it. But from my feedback from most people, they say they're surprised how easy it is to use. When you at least a little bit, even for people who have never touched Bitcoin, they said, it was really easy. And when you're Bitcoin already, you're more familiar, and I think it's not a problem. And you will find everything what you expect on an exchange software. You have charts for the market activities. You have then this offer book where all the offers are listed, so you can pick up an offer when you find there is a good price. When you think there's no offer with a good price, you can create your own offer. You can define the price even with the market price, so it will always go with the market price. You can say I will buy 1 Bitcoin with 1% lower like the market price. So even if the market price changes a lot, it goes always as the market price. You don't need to care as much. And
It's like a stock exchange.
Basically like...
it's negotiable, the price of Bitcoin is negotiable?
No. When you create the one who creates the offer, he defines the price. Just with the percentage price, he can define a fixed price with, I don't know, $500, or he can say I buy Bitcoin with 1% under the market price. And now we come to this part of this decentralized autonomous organization. I assume there are probably some people who have never heard about this, so I will give a quick overview what the basic idea is. I mean, there is no clear definition, and I can only give you my view, what I understand under this concept. I think decentralized organization, that's quite easy to understand. It's an organization which is completely decentralized and has no borders for one country or whatever, like Bitcoin. I mean, developers from all over the world are working on it. And they're trying to achieve something, whatever it is. It can be a company, but it can be also something like an NGO who just working together on something like a political party or whatever. But the autonomous part, I think it's not so easy to understand intuitively what this means and how it can be applied here. And maybe it's the best when I give an example, and I think the best and earliest example for a DAO or DAO is Bitcoin itself. Bitcoin can be seen as an early form of a DAO, and it becomes autonomous. There is no CEO, there is no company, no government who is organizing or ruling Bitcoin. It's organized by many, many people all over the world in a very permissionless and open and transparent manner. So everybody, when you're a good developer, you can start developing on Bitcoin, and when you're doing something valuable, it gets into Bitcoin. There is nobody has the right to say, no, that's bullshit, that will never go in. When it's good and the community accepts it, then it goes in. But then, of course, you need incentives why a developer should spend time on such a project. And the incentives to bring the human factor in this organization is money at the end, or some sort of value representation to make it a little bit more wider, because I think, whatever. And in Bitcoin, it's the token itself, the money. Like for the miners, the incentive for the miners to put so much work and money into it is the block reward that they get the Bitcoin out of it. And for the developers, probably most worked for because they liked the idea and the technical stuff. But I think they also have seen, okay, that might be something big in future. So when I get early Bitcoin, because I understand the system and I buy it easy, at the early days, I mean, the Bitcoin was nearly nothing. And they have made probably quite a lot of money with that. And it was sort of investment or payment at the end that later they get paid with the increase of price for all the work what they have put in the project with the price increase. And all the ecosystem around there also, why is a company now doing something in the Bitcoin space? Because they are contributing value, hopefully. Maybe some contributing negative value like this chain analysis or whatever, which are destroying the fungibility. But whatever, there are many companies who are adding value to the ecosystem, and when it helps that it brings up the Bitcoin price, they are profiting just also from the price, because usually they are invested somehow in Bitcoin. So I think the interesting part is how you can build such a decentralized organization in a way that it replicates, that it lives on its own without any dictator, any person who is ruling everything, which is very different to all the traditional model like a normal company. And it can work, as we have seen, and it works pretty good. And you just need mechanisms, game theoretical mechanisms, how you create the right incentives for participation. So people, humans who are necessary to solve the complex problems, because all the interesting and complex problems cannot be solved by software alone. Hopefully, also not in the future, because otherwise I would talk to AI agents here and computers, and it would be really boring to drink beers with them. So I prefer to talk to humans, and and that's a little bit different probably from my view from the DAOs with other people, like the DAO from Ethereum. So some people dream of completely automated systems where we don't need the humans anymore at all, because they're just corrupt and whatever. That's not my vision at all. I think the humans we just should free up the humans for the work where they're really good at, like creativity, like the stuff what the machines are usually very bad, and we should of course eliminate all this stupid mechanical work which is just a waste of energy for humans, and have computers and machines to do that. But all the important, the really complex and creative work should be, or can only be done by human, in my opinion. And to bring the humans into the equation, to attract them, we need a sort of tokens, currency, value system to give them an incentive. In Bitsquare, the motivation behind the DAO has several reasons. One is to make it bigger and scalable, because at the moment it is funded by my savings and donations from people, and with my work basically. And of course that was working until yet, but it starts already. It's already too much work, but I cannot handle all. So I need more people for participating, especially developers, but also on the community level for promoting the project, and many different areas. And the classical way would be to find an investor and take the money and pay the people. But then I would introduce a single point of failure when I have the company, have contracts with the investors. The investor became more important over time. The next investment round, you need more money and so on. You are selling your independence to the investors. When you have luck and have good investors, it's maybe fine, but basically from the basic concept, you're giving up independence. And more importantly, you introduce a single point of failure, because when it's really successful and some governments decide, no, we don't want that people can transact directly with each other and we want to have total surveillance of all their financial transactions, then they will put the finger there on the investors or on the company. So to avoid this, I want to have a distributed ownership. So basically what's needed is people who work for the project. I don't need money. I need people who help me to continue to build the system, all what's missing, to make it bigger. Can we keep the question for later? Otherwise I get lost too much. And that's and we have the lucky situation in Bitsquare that we have already money in, because when you're doing a trade, you have to pay a trading fee. That's the usual business model for nearly all exchanges. And when they don't take the money for the trade, you have to think how they are doing their money, probably with front running or whatever, because nobody works for free, at least when it becomes bigger. So yeah, we take the trading fees when people are trading, and this fee will go directly to one of the stakeholders, to the shareholders who have shares of the DAO. And that enables us to, yeah, to have a direct distribution in a micropayment manner, because the fees are in a small, small amounts at the end. It's not thousands of euro, whatever. That's 1 or 2 euro maybe later. At the moment, the fees are close to 0, but later when it becomes bigger, the fees will be somewhere in the market range. And every client of the Bitsquare software is collecting all the data for the shares, and then pick up one, not randomly, but in a way that he cannot cheat. So he will pick up one of the investors, and this will become the receiver of this share. And the more shares you have, the higher probability you have to get the money. So it will be kind of like a stream of micropayments from the users directly to the shareholders. Bitsquare never holds this money in between. And that avoids a lot of problems that even if my computer gets hacked, yeah, they cannot steal anything because I don't have the money of the DAO. It was going directly from the traders to the shareholders. And how are the share issued? That's another thing where my model is very different to that what the DAO was doing. The DAO, this big DAO from Slockit, who have collected 150 millions in 1 month, which is for me a huge liability. I could not sleep anymore if that would have happened. I mean, you have a huge responsibility. When you make a tiny mistake, you're blowing up all this. So I prefer a model to make it very slow organically, and actually I only need the money for the next month to pay the developers and the people who are contributing. And that will be different every month, because maybe 1 month there are more people and the other less or whatever. But we know it more or less, and probably will growing, because over time there will be more people involved. So maybe at the beginning we need 20,000 euro for paying a few developers and a community manager or whatever. So we are issuing exactly that money, what's needed for the next months. And we are giving the contributors either the share they can change when they need for tax reasons or whatever, the national currency money. Then the money, the shares goes to one of the team members, and they sell the shares on Bitsquare in the market, and then this contributor gets directly the fiat payment if he prefers this. But probably it's a better investment for him when he keeps the shares, because probably the price should rise, and then it's like in a startup, when you're in an important position, you get normally equity, and probably when you really believe in the project, you like to get more equity, because it's yeah, you get a better price. It's like options. So and it's very different, as we are not attracting investors directly with that. Of course, investors can buy it on the market when then the contributors are selling their shares over Bitsquare. Like a normal altcoin, the investors can buy this, and we will sell also a small amount of shares every month to have a price discovery at least, because we need a price to make the estimation what's the how much shares the contributor should get. And so there will be always some shares, but it will be quite limited. So it's designed that we solve the problem. What we want to solve is that we need more contributors, people working for the project, and not going over money and then give the money to the people who work for it. We want to give it directly, and we want to get this idea that the people who are building the system become the owner of the system. And also we avoid some legal problems with IPOs. It's a little bit, it's also a regulated area for some good reasons, because when you are selling your shares with a lot of marketing to laymen who don't know exactly the system and understand it, yeah, it can become close to scammy projects and so on. So it's a critical area. At least when they are losing their money, then they are very upset. In that way, all the contributors are experts, otherwise their contribution would not have value for the project. So we are not giving out shares to non-experts, we are only giving it out to experts, and we're giving out in a very slow, every month, not too much amount. So when people find out that does not work, that's a scam or whatever, they can stop after months working and don't lose a lot. So similar like with the regulation, with the exchange, we want to avoid to become in conflict with regulation on the DAO model or on this IPO model, in the way that we try to avoid the problems why this regulation and these laws were created for. I think I should have switched already. Yeah, and how to organize many people, of course, contributors is a challenge on its own. And we want to use, luckily there have been examples how this can work, like from the Pyro parties. Rick Falkwinger is the founder of the Swedish Pyro parties, and he has written this book, Swarmwise, the Tactical Manual to Changing the World, where he described how he built the Pyro parties with zero money and how he created this movement. And it was basically, it was based on same ideas. He had a strong content idea, and that was very addictive. People understood this content and this idea very quickly, that file sharing is not something illegal and they should fight for it to make it that it's something positive for society when people are sharing, and that we need new solutions for copyright industry and so on. And he attracted very quickly a lot of people, and the way how he organized it was in a very non-hierarchical way. People who contributed, it was always voluntary, so you cannot tell a voluntarist who is not working directly for money what he should do. He do what he really likes to do, and people are mostly best when they're doing what they really like to do. They can express their creativity and can produce. They're much more productive usually when they work on self-defined and not defined from a boss who tell them, yeah, you have to do that. And and it's a very exciting and interesting concept how you are organizing such a group, and I would like to try at least to apply this. I mean, in the experiments, and it's not guaranteed that it will work out, but I will go that road. So for me, this project is much more like just this exchange, like a financial product for financial services at the end. For me, this idea of the DAO opens up for the society new possibilities. I think most people are selling their time and their talent. Maybe not you, probably you're all very privileged people who are already working for stuff what they really like to do, but the average people are working just for money, basically. They are selling, like prostitutes, their time and their talent or their body, in the case of prostitutes, for money to somebody else. And I think that's not a very good solution for society. In the past, maybe we didn't have many other options, whatever, but now with these cryptocurrencies, with DAOs and so on, we can do much better. And I think now we have the tools to build organizations, communities who are working together voluntarily because they really want to create something what they believe in, whatever it is. But it's some value for the persons, and usually then there are other persons who also see value in this. And when they come together and build something bigger, because alone you're kind of like limited, but more people together can be much more synergetic and can create something much bigger, like a political movement like the Pyro parties. And when they have created value for others, and when they have a token in this system, then this token becomes money, like in Bitcoin. And then they get paid at the end with that token and with that money. And I could imagine a future where we have a universe of currencies, but currencies more in the sense of value representation. When Wikipedia contributors who are adding articles get paid or get issued all the time tokens for Wikipedia, even if it has zero monetary value at the beginning. Later, when you go to a bar and tell, hey, look, I've written this article in Wikipedia, and you say, wow, fantastic, I love Wikipedia and I use it so much, here, have a free beer. And then it's already a monetary value. When it becomes valuable for others, then you can exchange it. And we only need the tools to make this exchange frictionless and efficient. And I think we have already the tools. It's just engineering work and a lot of effort, of course, to make it, to go to that. But I think we are in the lucky position that we have the technological tools to really change the society, maybe in a similar way like the internet has changed the society. Yeah, I hope I motivated you a little bit at least to visit our webpage, bitsquare.io. You can find there everything. The download link for the software to try it out yourself. The white paper, all kind of information like videos and from high level to more details like the white paper. So more time you have, the deeper you can go to understand the system, how it works. And of course, yeah, we have a lot of communication channels, most importantly the forum. So when you want to join the community, when you have any skills where you think you want to contribute to the project, when you want to become a part of the DAO, visit us in the forum or in any other of the communication channels which are listed on the web page. An important part is also the DAO is still not implemented technically. It's the next stuff what I will work on, so probably in 2-3 months I hope I have it. But all the people who are contributing at the moment, they must not count with anything, with any reward, just from, they should do it by altruistic because they like the project or are interested in it. When we have the tokens, those people get rewarded, but I cannot make any promise because maybe there pop up some legal risks and we cannot implement it someday. I hope not, and I'm pretty, I'm pretty sure that we can implement it, and probably in 3 months I hope we have it. But until this time, all your contribution is like a donation, basically, and you have to see it like this. Yeah, I think we're over with the presentation, so I'm happy to take questions now. Wait, maybe take the microphone so the other here as well.
Yes, who decides every month how many new tokens issued? If it's new, so isn't it a single point of contact?
Yeah, that's a good question.
Huh? Can you repeat the question?
Yeah, he asked who is deciding how much tokens get issued every month and if this is not a single point of failure. And the current goal of the DAO is not to build a trustless, completely decentralized system because that's too difficult at the moment. And the problem what I want to solve is to get money, to get funding for the people what I need to make it bigger. But then, and in the beginning, I've done the big majority of work, so I will have the majority of tokens. So any governance system with voting and so on would not make sense when one person has 90% or whatever, so it would be pointless. But later, when there is more distribution of the tokens, the next step will be to develop governance systems. Also, there will be a board. Also, at the beginning, I will not be the only person. There will be 3 in the team probably, with a multisig who are issuing every month the money, and it will have certain rules that the change from 1 month to the other can be maximal like 10%. You cannot issue 1 month 20,000 and next month 100,000 or whatever. So there will be some predictability for the future, but later to make all the shareholders more participants really with governance, we need tools to develop, and at the moment those tools are not really available. I mean, liquid democracy, what the Pirate parties are using, is, in my opinion, the best what I know. There are a few projects in development, like Colony on Ethereum, who are trying to build something where people who work together have governance systems with voting alone is not alone, because knowledge is very important. When somebody has a lot of DAOs, but he has no idea, no clue about the project, I don't want that he has a big influence because he makes wrong decisions. Like, I mean, it would not make sense when we all vote for what's the next feature in an Apple design or whatever, because they are specialists, they're much better. Like I don't believe in the wisdom of the crowd for all those problems. It works for certain problems, like which is more opinion or where everybody has the knowledge, where the knowledge is very equally distributed, but with highly specialized stuff, the knowledge is also specialized, and I think you need to find a system which works good to get good results out, and which is fair, of course. But that will be an ongoing process, and I think that will take probably 1 or 2 years to really have a completely decentralized and completely trustless, and where this single point of failures or these starting points are completely out. And I think every decentralized system, also like Bitcoin, started with Satoshi. He, at the beginning, he was the creator, and without him, it would have not developed further. And it just it's a process to get from there to a really decentralized system, and that takes time. Who is first? Maybe you're closest.
I wrote down a lot of questions, but I will ask one most interesting one. So you mentioned that Bitsquare is open source and uses AGPL. And you're also telling that you're planning to convert Bitsquare into the DAO. So usually AJPL used by commercial entities like MongoDB doesn't want to let anybody else to run MongoDB as a service, so they use AJPL. So how AJPL will work in the context of DAO?
I don't see, maybe I did not understand completely, but I don't see any conflict that GPL license in general, or the AJPL, yeah. The main idea is that everybody can fork, but when they fork, they need to stick with the license, and it goes everything back. So when somebody's forking and make a new feature, I get this feature for free back and can merge it back. They cannot close it. So that's GPL, and GPL is just the extension that it's not only the software itself, it's also the network areas and so on, as far as I understand. But maybe we can discuss later when you know more details about this. At least I was discussing with the lead developer of Monero about the license stuff, and he knows a lot about licensing, and he didn't have any problems with that. But maybe you know more, and we can talk afterwards.
I'm interested to hear about disputes, the amount of disputes, what kind of disputes, what causes them, how you resolve them.
Yeah. Yeah, so the trade process, when you're doing a trade and you're not receiving the fiat money, for instance, every payment method has a maximum trade period. So with banks, it's usually 4 days. With altcoins or OKB, because they are instant, it's just 1 day. So when you have not received, for instance, with OKB the money in 1 day, you can click the button. Also, there will be then displayed a button in the UI, and you open a dispute, and then you get connected. There is a chat system implemented in Bitsquare. It's also over Tor, all encrypted, and you get a communication channel to the arbitrator.
Like, how many disputes have you had until now?
How many?
Most of the cause of them?
Yeah. At the moment, I don't have a real number, but more or less I think there were maybe 30 disputes, and there are 0 scams until yet, luckily. There were mainly, probably 50% bugs, software bugs, and 50% usability problems because people, for instance, I myself made a mistake to add a wrong altcoin address and mixed up new shares and new bits and had wrong addresses, and then the other could not send the money. Something like this, or some other usability related problems. And and do you want to know more about the dispute, or was this already off?
That's the answer.
Okay.
I have a question to continue on that. You said that for now the deposit is about 0.01 Bitcoin or 0.1 maybe later. With the volatility in Bitcoin, this could be used to as an option or as a future contract that only one way. So the whole idea of leaving the table attack thing. We're in the middle of negotiating, and I don't like the terms, and I leave. So how do you cope with that?
Yeah. So the question was, you could trick when you make an offer, and the volatility, the change in price was higher, like your security deposit. It's economically rational for you to not continue and prefer to lose the security deposit in the arbitration instead of having a bad trade because the price is much better at the moment. And the main protection is we have to adjust the height of the security deposit to the average volatility, or to not get in many cases like this. Sometimes it might happen when there's a huge jump. And at the end, you can see it as positive also, as a kind of insurance for the other trader, because when one trader gets a super good trading opportunity because of the price change, the other trader is the loser. So it's and like in stock exchanges, when there is chaos in the markets, they are shutting down trading for a certain time to avoid all these problems. And I think here it's a natural security mechanism. When the volatility is too high, then probably it will be limited by the security deposit, and the other trader is not losing too much money.
Will I get his security if he leaves the table?
At the moment, the security deposit goes either to the arbitrator or back to the users, or they can split it. But the security deposit goes either to the arbitrator or back to the traders. But in future, I will implement this in such cases that the other trader get the security deposit as a kind of like compensation.
Because then it's like an option. I can offer you to buy it on this price, and if you don't want to, you could get back the.
Yeah, I mean, actually, in future it's planned because Bitsquare is not very, probably not very interesting for these speculators, day traders who do thousands of trades quickly because it's a manual process. But I mean, on the altcoin side, we can automate it, but it's limited by the blockchain confirmations because otherwise it's not completely secure. So it's also not so. But the speculators, they are not interesting to get fiat or to get the Bitcoin. They're just betting on the price. And this is basically the concept of CFD or spread betting, also contract for difference, where you are making a bet with somebody else when the price will be $2,000 next month. Yeah, you're the winner, otherwise you're the loser, and you bet some money on this. And something like this will be implemented in future, but yeah, it's still a lot of work. And
Thanks. I have two questions. I didn't understand one important thing. So let's talk about arbitrator. First question, I have many questions, but it's the same.
we can continue later also directly.
So who will choose the arbitrator? Buyer, seller of the system? Who will store a third sign key? This is the first question. I will continue.
Okay, then I will stay here. As at the moment, as I said, this decentralized arbitration system is not implemented. So at the moment, there's only one arbitrator which gets selected automatically. But later, there will be important for you is only the language, because when the arbitrator is speaking Japanese, he cannot help you much probably, and I cannot help much Japanese traders when they're not speaking English. So we need languages for each arbitrators who are supporting this language, and that will be the basics selection model. And when you have, for instance, in English, when you have 20 arbitrators who are supporting English, then when you're the offerer, you have a list of all those 20 arbitrators, what you're supporting. At the moment, you can select it manually. So you can say, I only want to use that and that arbitrator. But probably in future, we make it only dependent on language, because that's the only interesting stuff. Because arbitrators, you don't know the arbitrators, they are anonymous. They don't have sort of reputation. So, or when there will be a reputation, it can be automated, that you get automatically the arbitrators with the highest reputation or so. But then, when somebody's taking your offer, he also has a set of supported arbitrators. Let's say you have arbitrator A, B, C, and you have arbitrators C, D, E. So only the C is the matching. When there is no matching, you cannot trade with each other. When there is one, only the one gets selected. When there is two, then randomly or pseudo-randomly, one of the two gets selected and the other can verify. So to collude that you can choose your arbitrator, that will be very, very hard. And the arbitrator himself, when he colludes, risks to lose his security deposit, so that should not be an issue.
Okay. Can be a situation when, okay, any arbitrator has to pay security deposit.
Yeah.
So can be, for example, how much transactions volume can cover one arbitrator less than security deposit?
Also,
because I can be a seller and arbitrator, and in the future I will make
yeah.
rank and
yeah.
will cheat all of them.
Yeah, exactly. Also, every trade has a limit. At the moment, for bank transfer, it's 0.75 Bitcoin. For altcoins, altcoins is 2 Bitcoin, but it will never be something like 20 Bitcoin, because that would be too risky. And when you want to buy a lot of Bitcoin, you can make several trades and you're spreading the risk. That's one thing. And the height of the security deposit will grow over time, because the money what the arbitrator earn, a part of this money will go to the security deposit, like a savings account. So over time, and that will be kind of like a reputation, because he has more to lose over time. And of course, we need to find a way that when you have parallel 100 trades and you only have locked up 10 Bitcoins, but with every trade you could theoretically steal 1 Bitcoin, then it does not match up, and we cannot take 100 Bitcoin as a security deposit. So the solution will be that when a scam happens, then there will be an alert system, and every user receives this arbitrator is not valid anymore, and then the follow-up trades cannot continue. And maybe there will be a few scams. When Bitsquare is already big enough, we might have an internal insurance for such cases, so the users will not lose money. Maybe one arbitrator has then cheated, and has stolen 5 Bitcoin. We will cover this, and it will not break the system. It will be very hard, and we have to design. So all these details in the arbitration system are not fleshed out yet, and it's actually quite complex, the system, because actually, something like that, and also the management of the multisig. So that's the reason why it's not implemented yet, but it's for the next months, and we have to make it good enough that it works in practice. It's probably not 100% perfect, because when we find a 100% perfect solution, when you find it, let us know. But that's the best what we have come up yet, and it only needs to work. I mean, the arbitration should be only an exceptional case. When there are many arbitration cases, we have another problem what we have to solve. So it really should be very rare at the end, the arbitration case.
Last question. Let's look at situation. For example, the question how arbitrator will decide. For example, first case.
Yeah.
I want to receive bitcoins by cash.
Mm-hmm.
I will open the dispute. Seller will open the dispute. He didn't receive cash. I didn't receive bitcoin. Okay, I don't care that I will receive bitcoins, but seller also want to receive. He will lose, but I will how to say, for example, I hate him. I know him and I hate him.
You don't know him because
okay,
you're anonymous.
The second question about commissions.
About
commissions.
Commission.
Yeah. If I understood right, seller and buyer should decide the way to transfer money. Right?
Okay.
So, for example, I am in China, you are in America, we will use Western Union, we will spend 15% on deal.
Yeah.
And after arbitrator, I will open the dispute as a seller because I didn't receive all amount of money.
I answer the second question first because that's easier. When there are costs on the national transfer, always the Bitcoin buyer, also always the one who is sending the fiat money, need to cover the costs. That's the basic rule. When there are some special cases, until yet I have not seen a case where some banks are also the receiving bank takes some extra fees, and the sender does not notice, then we have to deal it, and probably it leads to a dispute when the seller don't want to pay this 1 or 2 euro extra, and then the arbitrator find a way that he can send the money extra what was missing. Basically the rule is the sender of the money need to pay all the fees. And payment methods which are very expensive, like international bank transfer, will not be supported. So we only support payment methods which make sense for such an exchange, because with international bank transfer you pay 20 or 50 euros, so it doesn't make sense when you have 10% fees at the end. And that answers this question, more or less. Yeah. Then the other point, it's taken me a little bit longer, but it's a very good question as well. How can the arbitrator prove really what was going on? Because of course both can lie, and how can he find out the truth? But luckily there is a fantastic project out which is called TLS Notary, and that's basically you get from this system, which is just a plugin in the browser, you get the same security like when you ask your bank for a digital signed statement that you have done the transfer. So when you are in the role that you need to send the money, you could ask your bank to get a signed statement, and then the arbitrator can verify this with the public key of the bank that this was correct. And then at least, when we trust the bank, which we can in such cases, in other cases not, of course, then that's fine enough. But unfortunately, the banks don't offer these services, so it takes you weeks until you get this. But this TLS notary system, which is basically it's a hack in the TLS protocol. In the TLS protocol, it's very complicated and I cannot explain the details, but it's an open source project with everything is explained. A third party is in the middle of the transaction. That sounds very scary, but it's not, because it's all encrypted, so you cannot read any data. all what he's getting is a hash of the data from the bank, and then he can sign this, and then when the other user, when you go to your banking webpage to the history and you you make such a signed statement of the history page where you can prove that you have sent the money, and you would temper it, then the hash of this page would be different and it would not sum up. So the arbitrator receives then from both parties such a signed statement where they have to prove their statement, and the arbitrator can verify that that was not tampered. So there is no way to, that's cryptographic proof that this page, what you display the arbitrator, is exactly like the bank sent it to you. And that's I think we need to...